Hello, chart watchers and DecisionPoint faithful. Welcome to this June 14th Monday DecisionPoint show. My name is Erin Swenlin from DecisionPoint.com. I am Vice President and Senior Technical Analyst there. Let's go ahead and get started. Carl wasn't able to join me today, but I have plenty to cover and talk about. I will do the SPY and indicator overview that he typically does. I'm going to look a little bit at sector and industry group strength right now. The market is looking a little toppy. Everybody's waiting to find out what's going to happen with the Fed. So there are a couple of sectors and industries to maybe consider going into the summer that I'm going to share with you. I'm going to cover a few diamonds of the week. I covered some in the Chart Watchers newsletter this last Saturday morning on two of my diamonds that did well last week and one that did not. And I'm going to cover those, but I'm going to also cover some new ones for you to consider as well. And then after I pick those diamonds of the week, I'm going to give you an example of how I time my entries in the trading room that I do. The trading room being on Mondays. And right now we still are running our spring special. It is going to end in July, so take advantage. You'll get 50% off your first month if you use the coupon code SAVE50. And if you aren't signed up to go into the Monday free trading room, you can sign up right off of the homepage for DecisionPoint.com. All right, so let's go ahead and we'll take another quick peek at our, there you go, free registration, join me on Mondays. We saw a lot of great stocks today. DecisionPoint's sector scoreboard, everything is still on a buy signal. Of course, the intermediate term trend model is determined by 20 50-day EMA crossovers, or silver crosses, as we like to call them when they're on a buy signal. And then, of course, the long-term trend model, and that is based on 50 to 100-day EMA crossovers, or golden crosses. So we have golden crosses right now currently on all of our sectors. All right, well, let's get started and look at a couple of good charts. So I'm going to start off with our regular review of the S&P 500, the SPY in particular. Let me get this chart up to date. There we go. So it was looking, we had a red candle earlier today, but now we are seeing prices continuing higher. We printed new all-time highs today. And the PMO, which did have a crossover last Friday, is continuing higher by just a little bit. So we are on a buy signal currently for the S&P. We're watching the VIX very closely right now. It's highly overbought. I hadn't seen these low readings since before the bear market, the bear market, the pandemic. So now we are starting to see those VIX numbers rise just a little bit. But on our inverted scale, as long as the VIX is staying above its EMA, we are somewhat protected from those price shocks that will now and then occur. And currently, short term is looking still pretty good. We are sticking to this rising trend. If I drew a rising trend line here, you would see that we're still continuing to make new all-time highs, and we're on a really nice move to the upside here. And you know, currently the RSI is positive and it's not overbought. The one issue I think we have, of course, we're worrying about the market topping at this point, of course. But we have this rising trend channel that's really been in place since that November low. And we are currently traveling near the bottom half of that rising trend channel. So the question will be, right, if we can get up to test the top of this trend channel. I don't think we're going to do that just yet. But if we do see a pullback, that 50-day EMA will probably be your stopping point when we get there. And that would keep your rising trend intact in the intermediate term. Looking at our indicators, I haven't even looked at all of these charts yet today. All right, so we did not have any climaxes today on our short-term climax chart. I do note that we still have a declining trend as far as new highs go, yet we are making new all-time highs. So that's one of many, many negative divergences that are currently on our chart. So I'll show you a few more of these. These are our short-term indicators. And one of the things that I pointed out today in the DecisionPoint trading room is that we do have oversold readings now on this. We have a very deep negative divergence. Obviously, price is making new all-time highs, and this indicator had been, continuing to move lower. In fact, the STOV did move lower today, but you can see that the STOB did tick upward before really hitting any negative territory. So I want to see these moving up in concert. At this point with the mixed like this, I don't have as much confidence in this current short-term rising trend we do have based on those short-term negative divergences. But I think that we're in a position to have the market continue at all-time highs in the very short term, just because we do have these indicators that are oversold, and at least in the STOB's account, it is rising. You can see that we are getting a little bit of improvement right now too on the percent of PMOs rising, but anytime I see a number below 50%, it does make me scratch my head and say, how are we going to continue to make new all-time highs when we can't even get half of the membership of the S&P 500 to show rising momentum? And again, these negative divergences. So we have to keep all of this in mind. There's still information out there that keeps us from being completely bearish, if you will, in the short term. The intermediate term is starting to look a little more dicey. You can see we still have these negative divergences in place, and as we continue to make new all-time highs, they just keep continuing to diverge negatively. I'll have to get a thumbnail up here, but it does look like the ITBM may have risen today. No, they're all still in decline. So that is not a good look when you're making new all-time highs. You certainly want to see your indicators at least rising at this point. And you can see, again, less than half of the membership has a crossover buy signal. So only 42% have their PMOs above their signal lines. All right, let's look at Bitcoin. Carl shocked a lot of people talking about the possibility of Bitcoin getting all the way back down to its basing pattern around 10,000. That is still certainly possible if you look at this reverse pennant, obviously breaking out of that short-term declining trend. But this is still going to be very, very difficult overhead resistance for Bitcoin to overcome. It's already struggling against the 200-day EMA. Add to that the 50-day EMA. It's going to be really difficult to see Bitcoin get above 42,000. It's certainly possible, but it just seems we're consolidating again. Flagpole consolidation tells you to look for more downside. Currently, we do see the RSI has gotten positive and the PMO is rising at this time. But again, that overhead resistance is just going to pose a problem. So I can't get too bullish at this point on Bitcoin. The dollar UUP is on the rise. Today, it did pull back slightly. It has not been able to stay above the 20-day EMA for any length of time. And we're finally seeing that occur on the dollar. The RSI is now positive. The PMO has been on a buy signal, finally starting to see unbalanced volume with rising bottoms to coordinate with the bottoms here on price. But that 50-day EMA is still posing a threat here for the dollar. But we do have this rounded bottom here, cup shape. Maybe we'll get a bit of a pullback here, get the cup and then add a handle. But overall, I mean, the dollar still looks fairly positive. This is a really important area of support too. It lines up back here with that 2021 low, and we're starting to see that bounce coming off of it. The big problem is that the dollar is in a bear market. Look at how far down the 50-day EMA is. That's just too far, and you're going to find a lot of bearish conclusions rather than bullish ones. But I have to say, looking at these indicators, the rising trend on the RSI, I think we will see price get above that 50-day EMA. This has been really hurting gold. And today gold really pulled back. We had a big 0.59, almost 0.6% pullback. 50-day EMA is going strong though. I am expecting that 50-day EMA to hold. You can see right now the next area of support is a bit closer to the 200-day EMA. So if we do end up losing the 50-day EMA as support, the 200-day makes a lot of sense as to the next support level right around that 170 area for GLD. RSI has moved negative, and you can see the PMOs on a sell signal. That does not bode well for gold moving forward. It had a really strong rally. It's time for it to pull back, and that is exactly what we're seeing. Gold miners, we have lost the rising trend on gold miners. It looks like it closed right about on that rising trend. 50-day EMA could be a really great point for a reversal on gold miners, but currently the RSI is negative. PMO is configured very negatively. We just looked at gold. Gold looks like it could pull back even more. And you can see participation is still waning amongst the gold miners. So I'm not particularly bullish on miners right now. USO, oil is moving up nicely, slowly, but making a nice, it's got a really great rising trend in the short term. It's turning into an intermediate term rising trend. We had the breakout from this bearish rising wedge, so that was particularly bullish. I consider oil a great place to be right now. Energy is still showing strength. I'm pretty sure I presented some XLE stocks last Monday on the program, so you can go back and look at those. But I'm really liking oil right now. I don't see any reason why we're going to get much of a pullback just yet. Yields have been really tugging, pushing and pulling, and currently yields are rising slightly. So now we're seeing the pullback on TLT. But we pulled back to this really important area of support. And with that new silver cross, that 20 above the 50, I am expecting to see bonds continue rising. But the problem is we are waiting on what's going to happen on Wednesday with the Fed. And that really does leave us a little bit anxious. I think everybody about the 10-year Treasury yield, which did break down last week. As you can see, we got that negative crossover of the 20 and 50, but a really nice bounce today off of, well, you could call it a support level here at that intraday low. But overall, I'm still not liking yields because we do see momentum is still pointed downward here for the 10-year Treasury yield. All right, that's our basics there. I wanted to spotlight a few sectors for you. The ones I think are on the move, ones you need to be aware of and start mining like I do in the diamond mine. We need to mine for stocks from these stronger sectors, especially when the market is starting to look weak. Of course, it's still rising, so how weak is it, right? Okay, here we go. We can see that participation is increasing on communication sector. I like that. We have a bearish rising wedge, but as you can see with today's breakout, we may end up breaking out above that bearish pattern, which would be particularly bullish. And you can see, as I said, that we're starting to see some improvement on the participation in XLC. So that might be a sleeper sector for you to consider. Consumer discretionary was one of the ones I liked on Friday. With my diamond mine, we went through to look at our favorite sectors and how they were shaping up. I like to find the sectors where we're just starting to see positive momentum and price breakouts. We didn't quite get the breakout yet here for XLY, the consumer discretionary ETF, and it is struggling against this area of overhead resistance. So of those sectors, the two that I liked, this one, I still like discretionary, but I just think we need to be careful. I know there's a lot of discussion about airlines and reopening and vacations, but at the same time, a lot of people are starting new jobs and maybe they're not going to have a lot of vacation time. All right. Materials are actually fading fast. And really, when you look at the gold miners, it shouldn't surprise you that we're seeing this pullback on materials. Not that there aren't areas in materials that are still doing well. But overall, we really want to stay away from sectors where we're starting to lose price support at the 20 and at the 50. So I'm not really thrilled with materials moving forward. Tech, Carl wrote an excellent article on tech and all of the negative divergences that are currently occurring in the tech sector. We're getting ready to hit overhead resistance here for tech, but honestly, the sector chart still looks very strong. We don't have completely overbought readings as far as participation. And I know that when I looked at semiconductors, I'll just poke into semiconductors. I looked at that this morning, and you can see that we got that nice little breakout, which is probably pushing XLK a bit higher. But I have to say, when you look at the semiconductors versus the S&P, nice rising trend as far as relative strength. And, you know, we're making that move toward overhead resistance, RSI positive, PMO picking up momentum moving forward. I just am a little bit nervous about tech because it does tend to lead the market, and we're still a little unsure about what's going to happen in the broad market because we do have all those negative divergences, still looking a bit toppy. So while I think technology isn't a bad place to be based on those sector charts, I would just be nervous. Utilities is really where I'm starting to look for some mining, if you will, mining for good stocks. Look at this beautiful breakout from a declining trend channel. The PMO is just now giving us a crossover buy signal. RSI is positive and rising, but not overbought. Utilities right now, I think, look really good. Look at the improvement in participation as more and more of the stocks in utilities start to move above their 20-day EMA. I'm not thrilled with this BPI. I'm not going to lie. The SCI, the Silver Cross Index, is still at a healthy enough 80% or more level. And again, OBV is starting to take off. You're seeing a lot of interest moving into the utilities. This tends to be a pretty good sector during the summertime months. So this is one of the sectors that I am looking at most closely. So if we're going to go into utilities, let's look for what those strong industry groups currently are. The best way to do this is you go to your sector summary here, and then I'm going to choose the utilities sector. This is going to bring up all of the industry groups within. Now, based simply on scooter, gas distribution and multi-utilities are showing the most strength. But when you look at these charts, conventional electricity, I think, is where it's at. It's been beat down just like the sector, and it's breaking out. If you look at water, it's still doing well, but getting ready to hit overhead resistance. Multi-utilities have just been in a consolidation, moving sideways. I don't know that there's a whole lot we can get out of that, but I do know that there are some good names. And gas distribution, notice it did pull back and it hit when it hit overhead resistance. I like conventional electricity. I think this is one of those industry groups you need to pay attention to. Look at that PMO buy signal coming in on the conventional electricity index. Nice breakout from a declining trend, RSI moving positive. So I think that is one of those industry groups you really want to concentrate on. Now, if we go back, the other one that I liked, if you recall, was communication services. And we can do this by scooter as well, but I like to take a peek at these little mini charts to really tell me where I should consider. Right now, when I look at these, I'm not liking many of them. I would have to say publishing looks okay. Media agencies looks pretty good, but internet seems to be where it's at. And let's look at this. Nice breakout, just like we're seeing in the comm services sector. Nice PMO rising here on the internet index. And look at the outperformance against the S&P. So I think this might be an area to keep a close eye on going into the week as well. But let's go ahead and start looking at some charts. And I'm going to talk to you about how I time my trading entries, because I think a lot of these stocks look good. I think that they are at a point where we could start looking at possible entries. So what I like to do, and I'm going to start with AGR. This is in the multi-utilities area. Avangrid, I think this one looks really good right now as a proposed diamond of the week. Let's bring this over here. DCP, I think I mentioned this one last week, and it pulled back today, but it looks good still. So we're going to put AGR over here. So what I like to do to time my entries and exits is I use a 5-minute candlestick chart. Very unusual. A lot of people, most people don't look at a short-term chart like this. And, honestly, at DecisionPoint, we didn't always look at short-term charts like this either. But when I started publishing DecisionPoint Diamonds, I started to look more closely at timing trades, because that's what I'm trying to do with the DecisionPoint Diamonds, find those diamonds in the rough. This one looks great. AGR is just broken out. I'm a little nervous because that RSI is on the overbought side, so we do need to pay attention to that. But again, I think that the utility sector still has a lot to offer here. And you can see multi-utilities really performing about as well as the S&P, although I can see last week it started to outperform somewhat. But AGR is doing great. It has been outperforming the S&P since May, and it looks like it's poised to continue higher. So now what do we do as far as timing our entries and exits? It's really simple, guys. 5-minute candlestick chart, RSI, PMO. I have the OBV on here as well, but I don't use that particularly much when I'm timing my entries. What I'm really paying attention to is what is the PMO and RSI doing? I am looking for moments in time. Let's see if I can get this here. I want to see a positive PMO crossover and a positive RSI. When that happens, that's the entry point I want. Now, in this case, we did have an entry when the PMO crossed over, but the RSI was still negative, so we were going to hold off there. The next buy point that came in, there's your PMO crossover. RSI didn't really get positive till about here. So your buy point would have ended up being here today. And if you bought there and you made it to the close, that's a 1% gain just in one day, simply by using the PMO and the RSI to time your entries and exits. So let's look at another one that I have for you. AGR is new. AEE, I think, was one I was looking at as well. There we go, another multi-utility. This one I liked mainly because we have the rising bottoms here and then a flat top. And that is a bullish rising ascending triangle. So the expectation is a breakout above overhead resistance. Notice that this one's already got a nice positive RSI. Unlike AGR, it does, it's not overbought. So we're waiting for the breakout on this one. And you can see the only issue I have is it's really not performing as well as its group right now. But as I said, I'm expecting utilities to really start breaking out going into the summer. So I do like AEE. Timing an entry and an exit on this one. As you can see, our buy point, the first one came in on Friday. Obviously, we missed that. But had you looked at AEE and decided you wanted it, you would have watched it this morning. And when it got to its crossover buy signal and the RSI got positive, which was right here, that would have been your buy point right around 85.30. If you'd gotten in on that buy point and kept up till the close today, that's a 0.62% gain on that entry, just by using the PMO crossover and a positive RSI. This is such a powerful trading tool, and it's, honestly, it's so simple, but it really, the PMO on a 5-minute basis is actually very, very prescient. It's really great for timing those entries and exits. All right, so I have two more for you. 2 diamonds. Let's get to, and it is my under the radar one is going to be CarMax. One of the reasons the CPI came in so high the consumer price index was 30% or more was based on used car prices moving up. That is really what skewed it. And so my technical picture here of CarMax, which is well known, of course, as a used car group, this one is poised to break out. This one I love. You've got the double bottom going on this one. We are expecting the upside breakout on the double bottom, and that would take us pretty much to resistance, this resistance zone right in here. And I would look for a price move up to that 130 level at a minimum. You've got the PMO on that buy signal, and then look at how it is outperforming. Granted, it's in an underperforming group, so outperformance is a little bit, well, we know that you can go down and still outperform a group that's going down faster. But what we want to see is that improvement against the S&P. And CarMax is starting to, under the radar, starting to outperform over last week, and it really looks good for a breakout. Timing wise, if you're looking for an entry, best entry, of course, appeared right back here at the end of Friday on that last bar. But of course, too late for us to get in there. Where was the next buy point? The next buy point came up basically right about where we're at now. The close was 118.20. Currently, we're at 118.10. So there is a buy point in force right now. And you could also make a case here for that crossover and another buy point that came in pretty much right around 118.20 again. The issue right now is I think you can get a better entry tomorrow. You want to watch for that PMO. It's turning over right now, which means we could see price come back down again and test this resistance level, which would give you a much better entry. So watch that 5-minute chart tomorrow on CarMax. And then I have two more for you, but I'm running low on time, so we're going to make them really quick. Illumina, I really like right now. Biotechs are breaking out, and Illumina looks just fantastic. It is getting overbought, but we also know it can stay in overbought territory for quite some time. And I think biotechs are getting ready to do that. You can see biotechs have started to break out and outperform, and Illumina looks fantabulous right now. So if we were looking for entries on Illumina, of course, the best one came in right here at a price point of about $449.93. So the closer we can get to that, the better. But unfortunately, the way the PMO is rising, we may not get that better entry, not tomorrow anyway. So we do have a very overbought RSI on that 5-minute chart. So we could see a pullback to clear that overbought condition, but at this point, not so sure. You might get a better entry for sure on that one. The other one that I'm going to talk about is Fubo. And I'm usually not into these sort of meme type stocks, but I really liked it on the pullback today. This was a diamond in the rough for my diamond subscribers last week. It's really right now just consolidating in a flag formation. I would look for Fubo to really make a move here. This is going to be a little more speculative for you, but I do like the way this one is shaping up. So this one, the PMO is really flat because we're looking at a consolidation zone. Currently, we're really at the bottom of that consolidation zone. The PMO, though, is telling us we might get a better entry than even here. So watch it, and if we lose that support level, it starts to go back down. Once we start seeing a PMO rising again, that's going to be your entry point on Fubo. I think this one looks pretty good as well. That's pretty much all I have for everybody today. I wish you a happy trading. Hopefully we'll have Carl back next week. Everything's fine. He's just taking the day off. And with that, happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.